right, good afternoon, folks, and happy Sunday. It is currently June 28th, and this is going to be the YouTube weekend chart prep video for the week of June 29th. Okay, so really the last week of June here as we kind of enter into the summer. So overall, this past week, we had a lot of coronavirus names run up. We had the markets weaken a good bit, which is something that we're not really that accustomed to at the moment, right? We kind of had a euphoric buying pressure phase there. So it'll be really interesting to see some of these charts going into the next week after pulling back slightly. And additionally, I'll just kind of say this right off the bat. This is my favorite watch list that I've had in a while, from the weekend transitioning into Monday. So we got a lot of great momentum plays that we're going to go over. We are going to start it off with S&P futures as usual and gold futures, which is something that's a little bit different just because I feel like this is presenting a decent opportunity. And then we'll transition into some other momentum plays and one options play. Okay, so a little bit for everybody. One thing that we will not be discussing, again, this is not an educational video. We're just talking about opportunity and how you can make money in the next week. So we're actually not going to be talking about what's hot or what everybody wants to talk about. I'm talking about what's going to make me money. So by that logic, I know a lot of the coronavirus stocks are hot. Most of them are on day 4, day 5, because they started running up on Monday or Tuesday of this week. So I'm urging you here, if you are just kind of going to INO every single day, or APT or Lake or any of the hotter stocks, and just checking in on those every single morning and seeing if you can bank, that might work for you, but might be time to transition to some of these plays that we're going to talk about, because these plays need 1 to 2 days to cool off. Then we can revisit. You'd be crazy to be buying at these levels short term, right? Short term, your job is to justify whether or not there's supply and demand. Clearly, there's some supply for these stocks as of Friday. Okay, so Friday was kind of a turning point for some of them. Let them cool off. We'll come back. All right. Now, to kick this off, let's talk about the S&P, which I'm actually going to switch up to the 4-hour time frame, which I know a lot of people use, but it's a little bit different in the sense that the reason I'm using it this time around is to get an idea of what's support and what's resistance, because long-term trend, as you guys are probably already familiar, this is stuff that you've already charted out, I'm sure. The daily chart trend is losing steam. It's not necessarily reversing hard, it's just losing steam. We would need a lower swing low, which means just by trend analysis, right? Swing high, swing low, swing high, and then this would be the lower swing low. That's what we would need to confirm a reversal. So just at a glance for trend analysis for the markets, the trend is losing steam. We have not gotten the full-blown reversal, but I think if we're going to get one, it's going to be this week. Okay, I'm not throwing out some big doomsday warning. I'm just saying, based off of the price action that we got last week and the headlines, right, that typically results in a pullback. Okay, so for those of you that aren't aware, the reason why the markets pulled back this past week is because of the coronavirus data. I've been posting this for weeks now, and this isn't an I told you so by any means, but when we get an uptick from 2% of cases to 2.1% even, doesn't seem like that big of an uptick in the cases, but that's a pretty fast rate of growth, right? From 2 to 2.1, that's a big increase, okay? So few weeks ago, we had those increases. Now we're getting increases from 4 to 7% overnight, right? Again, regardless of what you think about the coronavirus, that is causing the markets to sell off because businesses are backtracking on their reopenings, okay? It's not a matter of whether people will go out. It's the actual restrictions that the government and that these businesses are imposing that are being backtracked. So that is resulting in the pullback, okay? Don't politicize the coronavirus, right? Just focus on how the markets are reacting to the headlines. This week, clearly a negative reaction, right? The dip did not get bought. We closed at the weekly low, okay? See how this was this week's price action? Monday, Tuesday, Wednesday, Thursday, Friday. We closed at the low point, meaning that there's supply here, okay? So going into next week, that doesn't really bode too well for us. To get the key levels, right, we know the trend analysis in general is showing that the trend is losing steam and could potentially reverse this week if we crack this area. But the 4-hour, I thought, just for, the sake of getting a good visual and a good idea of what's going on, was really useful because we had a smaller support area on Thursday. We cracked that on Friday. And this is also showing the overnight gaps. So what I'm thinking this week, just based off the rate of decline, right? You can see that we have kind of a little wedge here. In order to get any type of big bullish move, and this is where I'm going to be pretty strict. I'm going to sound a little bit harsh moving forward. We have to break this trend line. Okay, it's not a huge trend line resistance, but just in terms of putting in lower highs and higher highs, right? As you guys can see. So we had swing high, swing low. Right, swing high. This was lower, technically. Lower low, okay? Lower swing high. So what I'm saying is that if you want to make any type of bullish mention for the S&P this week, we have to be putting in higher swing highs. Okay, we need to move above that level. So short term, what that tells us is that this area here at 3077.5 is going to be the big resistance, okay, because that's what bears have to defend in order to keep this drop coming, okay? And those of you that are in the Trade with Text chat room, right, the actual paid $50 a week one, we talked about this on Friday, but this is the reasoning I told you guys that I would go over in the weekend video. That basic trend analysis is telling us that this week, even though we had some bullish moves off the lows, they were not actual bullish moves. They were just little traps here or there. Okay, and that's because we did not put in higher highs. So next week, if you want to make a bull case, it either has to be off of a big support, so down here, okay, 29.30, a level that you guys are probably already familiar with, right? It's a 61.8% fib on the daily. Or it would have to be for a higher high, so a break of this. So going into this week, from a bullish standpoint, that's the game plan. From a bearish standpoint, we're just looking for a magnet down to this area. That's it. Okay, it's nice and simple. The only issue I have with this chart, and one thing that I said on Friday to my members as well, there are so many key levels. There's so much going on. Keep it simple, right? We have volume increasing, so we want volume to be present. Right, we want high relative volume if we're taking larger trades like this, okay? And we want sufficient risk to reward. So make sure that you're not just trading because you're anticipating a big move. If you need to wait for the big drop down and then play off that level, that's fine. Just make sure you're not trading lower volume, lower range days, okay? So key areas here, just to kind of map this out again, 3077.5. 29.30. Okay, that's the fib. I'm not taking that low. I'm taking the fib because that's what caused that bounce. All right, basic technical analysis there. 29.30. These are the two big areas, but short term, we also have a bunch of other nearby levels, one of which is 29.73, 29.97.75, which we actually tested on Friday and just barely held by the close. Okay. And then above that, we have a bunch of key moving averages nearby. So I'm actually going to simplify it. I'm just going to focus on these levels instead of over trading near the moving averages, so that I have a better chance of making money consistently this week. All right, just going to keep it simple, waiting for a test of these zones or for some kind of a trend flip. All right, but for now, signaling a magnet down to 29.30. We'll see what this week brings. Okay. Last thing I'll say for the S&P before we move into gold. Right, this is obviously the longest we spent on a ticker for the analysis. Do not try to nail a big breakdown or a big breakout. Okay, this week was a disaster for anybody that was trying to do that. Focus on the range that's given to you and play that. And I know that's not as exciting. I know that's not what people want to hear, but again, we take what the markets give us. So this whole week, we saw a huge down day and everybody go, oh, doomsday tomorrow, we're going to crash. And then we'd put in an inside day, meaning we stayed within that day's range. So my advice to you guys, wait for that range to be defined and then use that to your advantage instead of just trying to nail a big short every single time. Okay, worked wonders for us this week. We actually did very well in what I think was one of the hardest trading weeks we've had in a while because it was just so different. Okay, now second ticker is gold. This analysis is going to be a lot more short and sweet. We're just looking at futures here, so you guys can kind of apply that to everything if you're trading the gold ETFs or whatever. But basically, gold is a safe haven, right? And normally, I actually just like to play the range back and forth on gold. That's another way we made good money this week. We just shorted it on the false breakouts and bought the dip on the false breakdowns. Gold has been ranging between these two areas this week, to give you an idea. This past week, 1766.7 and 1788.8. So day traders, this is going to be your main focus, right? Playing that range back and forth until one of them breaks. Okay. Swing traders, right? Gold is actually setting up pretty nicely on the long side. I don't think it takes a rocket scientist to see that. If the markets keep dropping, so this is conditional, right? If the S&P goes down, all right? If the markets keep dropping, money's going to flow into safe havens, i.e. gold, and this thing's going to blow the top off. So basically, we mapped out those two areas, 1766.7 and 1788.8. That's the make or break zone. That's the little box that we have going here. The reason why 1766.7 is such a big area is because that's also the 8 EMA support. So if we're going to form a trend and rip, it would be within the next 1 to 2 days because we formed a very strong candle off of that 8 EMA. Okay, so the support stays the same. Really what we're looking for this week is consistent closes above the 8 EMA and then a push through that resistance. And if we do get it, so swing traders, you have the full target here. I have a fib extension mapped out. You can kind of see it in the distance there. 1825.5 would be the big target. Okay, 1825.5. So 3 key areas for gold: 1788.8, 1825.5, and then the lowest one of the 3 is just that moving average that overlaps with a fib. And let me zoom back in because I already forgot it. 1766.7. All right. Nice and simple for gold. Looking for a make or break of this zone? If so, that's the target. Okay. Now, for Facebook, this is going to be the first options ticker that we talk about. So we have 3 killer momentum plays that I'm actually really excited to get to. If you guys haven't noticed, I put the favorite plays at the end of the video, like the really exciting ones, because I kind of want to reward the people that watch it all the way through, as ridiculous as that sounds. But for the most part, I want to go over this options play and then get to those 3 momentum plays because those are killer. So Facebook, everybody and their mother's talking about this. Normally with FANG stocks, right, the big tech names, I would say buy the dip. This is one of those scenarios where I think things could get a lot uglier for Facebook before they get better, especially if the markets slide a little bit. So notice that with each game plan, we're kind of saying if the markets are red today, focus on gold, Facebook options, etc. If the markets are green today, we'll talk about some of the momentum names shortly. Okay, so again, you're adapting to what the markets are giving you. Okay, you're not just blindly looking at the same ticker over and over. All right. Now, Facebook, the reason why we're talking about this is because they're getting a lot of their ad revenue just chunked away quickly. Obviously, you guys know about all the political stuff that's going on in the U.S. If you are a foreign, then you might not, but a lot of big stuff going on, a lot of big movements because of the recent protests and whatnot. But basically, Facebook is pulling back because they refuse to have any type of censorship on political ads that are lying, on anything that is hate speak towards black people and different just groups in general. There's a lot of hate speak going on Facebook because they don't have any censorship. So regardless of what you think about that, companies don't like that, right? I don't like that personally, but doesn't matter because we're trading stocks. Doesn't matter what my opinion is. I think that overall, the BLM movement should be able to speak its mind without any hate speak. So that's resulting in companies pulling their ads from Facebook. And believe it or not, that's how Facebook makes its money, right? It seems obvious enough, but almost all their revenue, right, is ad revenue. They're trying to diversify into different industries. They're not succeeding, right? Facebook portal, it's a joke. Facebook Marketplace, joke, right? They're not doing anything else. So by that logic, if these negative ad headlines keep coming through, Facebook will keep selling off. Right now, it shows that it's printing 216s, but over the Friday after hour session, it actually gapped down to the 212s. Okay? And this was the game plan that we had created Friday afternoon, which kind of sucks because it's already eliminated a lot of the downside. But the idea was if we crack this 50-day, which also overlaps with a gap fill area, okay, a little more advanced stuff here, but if we crack that 50-day, then we go straight down to the next fib, which is at 209.14. And this is just a fib on the daily time frame, right? For the S&P, we used the 4-hour, but for gold and Facebook, we're using the daily. So bottom line, we are already halfway there. Should be able to get there on Monday. Again, especially if there's any type of market weakness, that will just exaggerate the move. But Facebook this week, simple enough game plan. We had a box breakdown. It confirmed the move below it. Next target is 209. Realistically, let's say Facebook makes an over-exaggerated move. There are no bounces, whatever, right? Because to be honest, I'm going to be looking for the bounce too. The area that really is appealing that I would love to play the bounce off of is down here. And notice that I'm not getting too biased and saying, oh, we can only play Facebook short. I'm open to playing both sides, but it has to make a significant move down first. So it's not just $200. Get this idea that the mental support is the only support here out of your head. There are 3 big areas for Facebook down here. Okay, one is 198.76. It's in yellow. You can barely see it, but that's last month's low. So that's a big range defining area. Okay, we also have a key fib at 198.61. That's the 50% fib. So already big historical support, big fib support. And then we have the 200-day, which is the most important moving average on this chart. So the stars are kind of aligning here. If we get Facebook to magnet down there, we'll make money on the way down. Great risk to reward bounce area for swing traders and day traders. Okay, 3 big key areas there, and it all starts at 198.76. Okay, so ideally we take the short down to 209.14 this week. Depending on how we react there, we could get this zone. Our job is not to predict whether or not it gets there, right? We're just taking it one key level at a time. If it gets there, I'm going to be looking for a bounce. Okay, so short idea on Facebook, and then hopefully if we get to the right price, I'm saying this is what I want from the stock. If we get there, we take the bounce. All right, now this is obviously a potential options play. Let's talk about a couple of common stock plays here. Okay, these are stocks that you guys might have already heard of. Keep in mind, a lot of the people that are watching this video only trade one specific thing. So I'm going to try to give the full rundown if I can of each one of them. If you already know it, that's fine. Fast forward the video. That's why you got that little bar at the bottom. But first one is DADA, and I'll write these out. DADA SHLL. This is the one that you guys might be familiar with. And then CLDR, which is a stock that we trade a lot in the Trade with Text chat. We milk this thing almost every day and make money on it, right? Especially with options. But either way, these 3 you can trade common stock on. I think this one has probably the most liquid options, even though it's the lowest price. But DADA is a really simple IPO. It's an ADR, right? It's a China stock, but it is breaking out. And this is one of the cleanest breakouts I've seen in a while for an IPO. And the best part about it, and why I'm so excited about these 3 plays, is I actually don't think this is that hot of a stock. I don't think there are that many people watching it. And I'm secretly hoping that not many people watch this video because I don't want it to get too crowded. But DADA is breaking out over 23.96, right? It's really easy to just look at this chart and say, oh, it's breaking the previous high. But that's not the case, right? If we look at basic supply and demand, this is where sellers were sitting because look where we formed the 2 big red candles off of, right? This high, okay? And it wasn't just a standard red candle. That was a huge drop off from that high, okay? It went from 23.96 all the way down to the low 20s. Anybody with a long position got stopped out, no question, okay? But the good news is it formed a higher low off of a big support area here. So we know what the big resistance is, 23.96. Higher low formed off of the 8 EMA and this little trend line that formed. Okay, so we have a very simple risk to reward on this breakout, right? Either to 23.96 or to the 8 EMA, whichever one you feel more comfortable with. But it is giving a very clear long signal over that up to 26.25. That would be our next fib target. Okay. And again, this is not an educational video. This is a video where I'm trying to help you guys make money along with us. So I'm not going to show you how to draw these fibs and the extensions. We have other YouTube videos for that, right? You can just check out the channel. But 26.25 would be the next target. Okay. And to be clear, I'm saying that you guys make money with us. We post our alerts in the chat room, right? We walk you through these charts on audio and screen share throughout the day. So if you do go in for the free trial, just pull up the audio and screen share, and I guarantee you'll hear me talk about this before the opening bell on Monday. Okay, we'll talk about it a little bit more. All right, but DADA, crazy good growth rates, very impressive stock. I'm not trying to drink the IPO Kool-Aid too much, but I think this one has some real potential, right? 26.25 would be the first target, but that's a pretty modest one. Okay, just has to hold that level. All right, so DADA, a couple of points of upside minimum. Next one is SHLL, which at a glance off my watch list, this is probably the most questionable one. In the sense that if you're pulling them up one by one, this is easily the most overextended, overbought ticker. However, this is creating a great opportunity for a trap, right? Not only a bear trap, but for people to kind of step out of this ticker, leave it alone, and then it just makes a ridiculous run. I think it is more or less setting up for a run like NKLA. And again, trying not to drink too much Kool-Aid with these EV stocks, right? The electric vehicle stocks that have been running up like crazy lately. But if you look at this, I even saved a chart from a Barron's article over the weekend. This is putting into perspective how much hype has jumped to even some really bad stocks, right? Like NIO, if you guys understand the financials of that company, horrible. I mean, god awful. As in, you know, my baby nephew could run a better company than that. But either way, right? NIO, obviously very overbought, hyped up company. NKLA, another one for that group. Workhorse as of Friday because it ran up a ton. So out of this list, we're looking at the top three. Two of them are wildly overextended, right? Regardless of what you think about the company. Then we can go down the list to some of the ones that are a little bit less, you know, crowded in a sense. First one that comes to mind is Tortoise Acquisition Corp, which is Shell, right? SHLL. Okay. Now, the reason why I think this one could actually make a ridiculous move, at the very least to $30. Okay. The fib is actually 29 and some change, but I'll show you the text in a second. Just from a catalyst standpoint, EV stocks are hot, but this is a company that is merging with another company to create that value. It's not an electric vehicle company that people already know about. So I feel like in terms of people just discovering the stock, a lot of people still don't know about it, which could have a 2-3 day run. So we had day one on Friday of the next big breakout, right? Broke out, that's day one. Now we're looking at day two, so I'm thinking Monday will be a really strong day for the stock. Okay, just my 2 cents. We broke out over 20.99. Naturally, that's where I'd say, oh, we need to defend 20.99, but we've created so much distance that I don't think we're going to retest that early. Either way, it's really simple, right? We're just looking for a break of the high. I don't like these game plans at all, where we say just look for a push above that high, but we don't have too much else to go off of because these are new all-time highs, right? So 25.94 would be the key break. If so, the next fib extension, right, for those of you that like using the Fibonacci retracements. I thought I had it checked. Yeah, I have it checked. Let me make my chart a little bit bigger. 29.82 is the next target. So I said why I think it's a $30 stock. That's why I think it's a $29.82 stock. How's that? All right. So that's going to be my big target for this week. And again, just like for DADA, I think these are higher potential plays. So I think it could easily blow through that. All right. Now, last ticker, not as hot of a stock, so it'll be good to kind of come back down to earth here, be a little bit more grounded. CLDR, right? It's got some buyout chatter for those of you who are unfamiliar as to why. Let me erase that. Why it's running up. Okay, buyout chatter. We first saw that when there was a lot of big call buyers coming in, and we were saying in chat something suspicious. Buyout chatter came in. That was back here. That resulted in some huge gains. But now the interesting part about this chart, right, because we're talking technicals here, we are breaking out of a long-term downtrend line. Okay, and we used to, by the way, in the Trade with Text chat, we used to trade this stock when it was around these prices because we liked the potential of the company. Since then, right, we were clearly wrong about it. Can obviously admit that. It has come down to the single digits, and now it's climbing its way back up on very high volume. So, has high relative volume, has a clean breakout over this downtrend line on the weekly. Okay, and as you guys know, I say this in every single Sunday video, larger time frames equal larger moves. Okay, so CLDR, we're actually not just looking for a push up to 14 this week. What we're looking for in a 1 to 2 week period, okay, is for a pop up to this area here. And to be exact, that is 1523. All right, I don't know why it's not showing the price there. 1523. All right, that's a big historical level. So CLDR, nice and simple. 1523 is going to be the big target. The trigger would be 1393. That's what we need to break. Okay. And there are options available for it. Just make sure you're not going in with too much size, because even though the options seem pretty liquid, since it's a lower price stock, they are not going to move up that much unless you get a very big move from the stock. So options 101, if it's a lower price stock, you're going to need a bigger move to collect premium. Okay. And again, we're not going to go over coronavirus plays. I think most of them need to cool down for a couple of days. I do like BMRA. I do like some of the runners from Thursday and Wednesday of last week that cooled off, like Lake. Okay. But we're not going to talk about those. I'm going to focus on those 3 momentum stocks. Okay. So the S&P, just to recap, we talked about how we had downside to 2930 this week. All right, if it cracks a support. All right, for gold, setting up a nice trend on the daily, just has to break that box that we outlined. Okay, Facebook, simple game plan, would love the 198s for a bounce, and then 3 momentum plays to watch for the upcoming week. All right. And that pretty much wraps it up. So again, these are not educational videos, but if you did like the video, if you make some money off of this week, which I bet you will, I put some good money on it. If you do bank off this week, come back, like, subscribe, watch the rest of the videos moving forward. And if you want to, see this real time throughout every single day of the week, just join us in the Trade with Text chat. It's $50 a month, but I don't care if you can't afford it. Sign up for the free week, and we'd be happy to have you. All right. So good luck, guys. This is not an easy market to trade in, but I'm sure you'll do well. All right. We got some good preparation on our side here. That's what makes the most money. Okay. Have a good one, folks.